Welcome back to the channel. This video is going to be an update on the current market and the SEC meeting with the Senate. So I'm going to just go over, it's about 30 minutes. I cut out the important parts that I thought were important and I just put them in the end of this video. So if you want to watch kind of a glimpse of it was about a 2-hour meeting. There are videos of it online that you can watch the whole thing. It's kind of drawn out, kind of boring, but you could watch it, or you can watch the one that's after this video. In this video, it's about 30 minutes if you want to watch that one. But the gist of it is the SEC is pretty positive. What they want ICOs, they don't want a bunch of people starting ICOs and stealing people's money. They're worried about the investors. They don't want people getting ripped off. So they want you to be careful with your money. If you're going to do an ICO, you got to go through the regulations and get regulated and go through all the proper procedures to do that. So far, nobody has. I don't know. But I think the good news from the SEC has reflected in the price of Bitcoin. If you look, we have a nice bounce back coming. Let's hope tomorrow continues on and we get a good rebound. Hopefully, let's get back up to where we were. Let's try to pass our record high of 20,000. So I know China's going after crypto even more. They want to ban foreign exchanges. So they're trying to block foreign exchanges from their citizens. So the giant firewall of China is getting bigger. And I can't believe how China regulates the people like that. I'm so glad the United States government is trying to be optimistic and allow people to take advantage of the technology and create some good things for it. They just don't want people scamming people. So let's all do the good thing here. No more BitConnect coins, no more DogeCoin. Don't invest in those type of lending programs that have trading bots, because we learned from BitConnect they do not work. BitConnect was the one shot. Maybe they got a trading bot, maybe they don't. We all know now that they didn't. And DogeCoin's the same way. Regal Coin's the same way. Just don't invest in these lending programs. Let's try to find good projects, good programs, and good coins to invest in, to get behind, and then purchase and hold. One of the detrimental things for Bitcoin is the technology. So we have SegWit that's going to be coming out. Coinbase announced today that SegWit's going to be coming up in their wallets, which is going to make transactions cheaper. Bitcoin adoption has been scaled back in 2017 because of the high transaction fees and because of the network log, the backlog. That was slow to process transactions, and it was really expensive to send a transaction. So people got discouraged. It wasn't even feasible to use Bitcoin. So now using SegWit and the new Lightning Network, if that gets some traction and really picks up and people start implementing that and we start using that, maybe that'll help Bitcoin be more of a payment processing type coin. Other than that, people will just have to hold it as a commodity. But overall, it's good news within the United States. So that's probably why the price is bouncing back. Only if we could get China to do some good news, that would be awesome. Sounds like South Korea they want to do kind of like the United States is doing, know your customer type of thing. They just want you to know your customer. And I heard that they don't want foreigners to be involved in the South Korean exchanges to avoid arbitrage, where you can sell it, buy Bitcoin in the United States for cheap, go to South Korean exchange and sell it for high, and keep doing that to work the market. So they're trying to avoid that. Overall, it looks like the governments are trying to avoid a lot of corruption, which is funny because we all know governments are involved in a lot of corruption themselves. Anyways, Bitcoin price is rebounding. It's doing good right today. It looks good now. If you want to continue watching, it's about a 30-minute episode of clips that I highlighted. You can go through and watch those if you want. With Bitcoin, a lot of people ask, should I buy, should I sell? Recently, how the price came down so far. And you really need to base, if you want to buy or sell, based on the price you bought Bitcoin at and based on if you really need the money or not, if you can afford to hold it. I'm a long-term thinker. I think Bitcoin's going to do well in the long term. So I'm going to hold as much as I can hold. But if I really need some money to pay some bills, then you have to sell. So, And if you bought Bitcoin at 18,000, you don't really want to sell it at 7,000. You might as well hold it and hope it goes back. Otherwise, you take a huge loss. But if you bought Bitcoin at 1,000, right now it's at 79. If you have a 1, 2, 3, however many you have, maybe sell a little bit, get your money back, get a little bit back, and then keep some in. So you just got to do what works best for you. What works best for me may not work best for you, and what works best for you may not work best for me. You got to look at your personal situation and go based on that. Another thing that's came out recently is Chase and Bank of America. A lot of these major credit card companies now are saying they're going to not even allow you to buy cryptocurrency with the credit card. So probably anything that has to do with cryptocurrency. Genesis Mining is probably not going to work with the credit cards. Probably nothing to do with cryptocurrency they don't want anything to do with, which is really, I guess it's okay. It's kind of like gambling. It's risky, and you really shouldn't purchase anything with a credit card that's risky to begin with. So, I don't like credit card companies telling me what I can and cannot buy on one hand, but on the other hand, it makes sense because you shouldn't be purchasing cryptocurrency with a credit card to begin with. So, it's all a risk. Never invest what you cannot afford to lose, and if you think you should sell because the price is going down, then maybe sell, and then when it starts going back up, purchase. It's all what you need. So that's that. It's about it for this one. Continue watching if you want to see the clips on the highlights of the SEC meeting. Other than that, thank you for watching, and I will see you in the next one. Peace.
Much of the recent news about virtual currencies has been negative. Between the enforcement actions brought by your agencies, the hack of the International Coin Check Exchange, and the concerns raised by various regulators and market participants, there is no shortage of examples that increase investor concerns. It's also important to note that the technology innovation and ideas underlying these markets present significant positive potential. These aspects underpinning virtual currencies have the ability to transform for investors the composition of and the ability to access the financial landscape, thus changing and modernizing capital formation and transfer of risk.
Sometimes it appears that scam artists and hackers may understand more about the technology than most market participants. That should concern all of us.
It strikes me that we owe it to this new generation to respect their enthusiasm about virtual currencies with a thoughtful and balanced response, not a dismissive one. And yet we must crack down hard on those who try to abuse their enthusiasm with fraud and manipulation. And we must thoroughly educate ourselves and the public about this new innovation, and we must make good policy choices and put in place sound regulatory frameworks to reduce risks for consumers. There are some economists who posit that there is a relationship between Bitcoin value and the difficulty or the cost of mining which is a process of electronically producing these, and that there are some charts I've seen that have plotted that correlation that seem to be readily correlated until last summer when the price broke free of that correlation, and that it came back into correlation late at the end of the year last year. Now, I'm not an economist. I find those things fascinating, but I'm not an expert in it. But the point the economists are making is that there is some sort of floor, that the level set is not zero, that there is some floor there tied into the cost of mining in Bitcoin. And I'm not endorsing that point of view. I'm just sharing that with you.
You also mentioned personnel. You need personnel. There's a hiring freeze on. We talked the other day about this gets in the realm of appropriations and so forth. I'm hoping that we will give you every tool you need to do your job and to hire the people that you need to execute that.
Thank you very much. Thank you.
Let me just elaborate a bit. We continue to refer to Bitcoin. That is just one cryptocurrency. They seem to me and proliferating. That every day there's a new variety of cryptocurrencies. Some of them out and out fraudulent, some of them based on the same Bitcoin technology or processes. But just the sheer expansion of these cryptocurrencies is an issue, one. And then two, because my time is short and I have one other slightly unrelated question to Chairman Clayton, is are you tracking all these different daily emerging currencies, one? And two is, again, it goes back to my sort of step back question, is someone looking long-term at the systemic effects? You know, where are we going to be? This is eerily reminiscent of the late 90s in derivatives, which were nominally small parts of the market that were esoteric, et cetera, and then, of course, 10 years later, exploded. So why don't you start with Mr. Giancarlo and the chairman, and I'll finish up with the chairman.
Thank you very much. So you're absolutely right. Bitcoin is one of many. However, of the many, there's really a handful that have gotten significant traction, and so that's important though for listeners to know, because so many of these are fraudulent, as you said. We went after one, and just mentioned it because I think it's interesting, called My Big Coin, which became known as My Big Con, by people that were defrauded by it. It was people that really were taking, it was a Ponzi scheme. They were taking consumers' money and use it to buy houses and furniture and jewelry. And we went after them hard, and we will continue to do that. In terms of systemic risk, right now this is still a relatively small market just by ratio, but as you say, we have to watch it and watch it carefully.
Mr. Chairman.
Yeah. So, as I mentioned, the SEC doesn't have direct jurisdiction over the pure cryptocurrencies, but we have had to watch it because, of course, they're integrated with the markets that we do oversee. And to your question of does 10 make sense or 15 or 20 make sense, you know, I have a hard time getting my head around that, because if it's an efficient medium of exchange, 15 of them fluctuating different places probably doesn't make a lot of sense to me. But you know, that's where I'm at. On systemic, look, I agree with Chairman Giancarlo. But if people are getting ripped off, that presents reputational risks that can have systemic effects.
Which brings up the question of how do you tax it, if you need to? How do you recognize income?
The definition of a security is broad, and it includes. I'm going to not use the technical terms. There's Supreme Court cases and things like that, but it includes if you are offering me a security or offering me something, a coin, and I give you money, and the purpose of me giving you that money is to profit from your efforts going forward. So if I give you money, and you give me a coin, and you say I'm going to take the money and I'm going to grow a business, and that's going to increase the value of that coin. And by the way, Chairman Clayton, you can trade it to somebody else. So you may be able to get value for it tomorrow. In fact, you probably will get value for it tomorrow. Buy now so you can get more value for it in a few days. That's a security.
So is Bitcoin, or are these as currently being traded, are they a commodity, or are they a security, or are they both?
What's so challenging about Bitcoin is it has characteristics of multiple different things. One of the phrases that's often used is that Bitcoin is a medium of exchange, a store of value, or a means of account. Well, those three things have different connotations to them. If it's a medium of exchange, then it's like a currency-like instrument. And yet, as we've seen, a number of means of exchanges have been closed to Bitcoin. There was recently a Bitcoin conference that stopped accepting Bitcoin for registrants because they couldn't process the payments. So, but yet it's still spoken of as perhaps a means of account. And in that case, it has implications from the Fed and currency. From our point of view, when it's used as a store of value, then it's very much like an asset, like a commodity. And in fact, what we hear a lot of is people buying and holding. If you go on to the Twitter universe, you'll see a phrase HODL, which means hold on for dear life. And the thinking is that they buy it and hold it. In fact, I mentioned in my opening remarks my 30-year-old niece who bought Bitcoin years ago, And she's an HODL. She says, I'm going to own it. I don't know what's going to come of it, but I want to hang on to it. And she's not a fraudster or a manipulator. She's just a kid and believes in it. And, I was fascinated talking to her. And I think she represents a lot of folks that think there's something in this, I want to hold on to it. And so in that regard, from our point of view, it's a commodity. And if there's a derivative on that, we regulate it. The problem is, in the cash market, we don't have regulatory authority, means we can't set the standards. But what we will do, and we are doing, is looking for fraud and manipulation. And we intend to be very aggressive, if nothing else, so that people like my niece can have some security that there's not fraudsters and manipulators out there, and there are far too many of them.
This was a largely unregulated space across the world. And now what you're seeing is each country taking a perspective, a view, action, et cetera, which also goes to how functional is this asset class, and how would we regulate it, and how does it work? There's a lot happening that is beyond the kind of understanding of your average investor. How would you know when you have an unregulated exchange, the ability to manipulate prices goes up significantly, and just a few coordinated sales can change a price.
Or an email, a fraudulent email.
Correct. One of the most frequently searched items from a library computer is a Bitcoin. And so we're teaming up with CFPB to go out to America's libraries to educate librarians who often get some of the questions asked, to be able to direct library patrons to use our resources, our Bitcoin website and our other resources. So we are really getting very creative in the area of consumer education. I've mentioned we've got several podcasts on this subject, which are with thousands of downloads. We are working as hard as we've ever worked. We've never done as much work on consumer education as we've done with virtual currency. If it sounds too good to be true, it is. If they're promising ridiculous returns, they're ridiculous. If you are going to give them money, you'd better be prepared to lose it.
Chairman Giancarlo, when is the last time you bought a stock, exchange-traded fund, mutual fund, or a bond?
So I hold generally traded funds.
Yes. When's the last time you bought one?
Well, probably before I pretty much put my investing...
a year ago?
Well, probably before I started at the commission.
2 years ago?
Yes.
Okay. When you bought it, what'd you buy? Equity or bond?
Index funds, mostly.
Index funds, okay. When you bought it, did you sit down and read the prospectus for the index fund?
Well, I'm not supposed to say this as a lawyer. I'm not supposed to say that I probably didn't read it cover to cover, but I will confess that I didn't read it cover to cover.
How many investors do you think do that? Don't read it?
I think most.
Okay. So what's the point? I mean, we're talking about all the dangers and the risks of cryptocurrencies like Bitcoin. I'm putting aside the shyster fraud issue. I mean, what's the point of all this over-disclosure if nobody's reading it?
Well,
and why do we want to do the same thing with Bitcoin?
I'll say historically it's been one of the foundational principles of our securities laws that adequacy of disclosure, full disclosure, is one of the building blocks. I will tell you, having been in business, that most business people will tell you they study the prospectus only to see what they can sue on if they need to sue on something if something goes wrong.
I mean, I think you see where I'm going. I'm going to ask you both a philosophical question in a second about how far you think we ought to go to protect people from themselves. But I don't think the disclosure we have right now works. I think it's good for the lawyers, and it's good for the financial advisors. But I think we over-disclose. And I think you can, I'll bet you each have a smart lawyer on your staff. You could go to them and say, write me a good disclosure for Bitcoin. And you would get it back and look at it and then pick 50 names from the Washington, D.C. phone book and ask them to come in and say, read this and tell me if it makes sense to you. I mean, what's the point? How far do you think we ought to go here in terms of cryptocurrency? I'm separating this from the blockchain technology. I mean, China outlawed it. So I think South Korea has too. What are you suggesting, that we just go after the shysters and fully disclose? I mean, is that what you think we ought to do?
Well,
Secretary,
yeah.
or Chairman?
Senator, I think that is exactly the question we're here to pose and take forward, which is, what is the right way to deal with this new technology? I'm not, as just a person watching it, I'm not satisfied when I see people thinking that these trading platforms of cryptocurrencies have the same kind of protections that a stock exchange would. And I'm very unhappy that people are conducting ICOs, like public offerings of stock, when they should know that they should be following the private placement rules unless they're registering with us. Those two things make me unhappy. We're figuring out how to deal with them is why we're here. I agree with you that we should be careful not to go too far. But for me, just to be clear, for me in this ICO space, it's pretty clear that when people are violating our securities laws work pretty well. Disclosure can be improved. It can really be improved.
We're focused a lot on Bitcoin and crypto assets, cryptocurrencies, and I think there's even definitional issues here. But you've got a whole new platform called Ethereum where they're creating, file sharing or extra computer time. I'm not sure what kind of assets those fall into. Are they potentially regulated within your realm, or if there is a trading exchange, a tokenization exchange between excess computer time? I'm not sure where that fits at this point.
The definition of a security, I believe, the people who wrote the 34 Act and the 33 Act, they were smart. They did it on a principled basis, and they basically said, if you're giving people money in exchange for a future development of a business with the hope of a return, and whether that return comes in the form of server time or your ability to sell server time, it's a security.
But there have been, and I concur with the approach you've taken in terms of the ICOs, and I think there's been some very bad behavior. Mm-hmm. Yet certain ICOs, the SEC has not stopped. Others they have stopped. And are you going to go back and re-review the ones that have gone forward?
Let me say another thing about the 33 and 34 Act. When they were written, there was a great recognition that there was a tremendous amount of securities activity in this country, and that we were going to rely on gatekeepers to help us enforce those, and liability to help us enforce those rules. Accountants, lawyers, underwriters, sellers, and the like. I'm counting on those people to do their job, and I've made that clear.
Let me ask Chairman Giancarlo, what we did, and one of the things I'm concerned about was that I think we may have moved too fast on allowing, for example, futures trading on Bitcoin. And I would just wonder, you've allowed future trading contracts on Bitcoin, yet the SEC has not allowed ETFs. I'm just worried that we need a much more coordinated effort, because I think the potential writ large amongst crypto assets and the underlying blockchain could be as transformational as wireless was years ago. And I think we're going to need a much more coordinated effort. I know my time's expired, but if you could both quickly comment on that, I'd appreciate it.
I believe it is critically important that we coordinate on this. I believe that we are all both individually and collectively understanding our authorities, understanding this new technology, working around it. There was a communication amongst myself, Chairman Clayton, the Treasury Secretary, and others in connection with Bitcoin futures. And Bitcoin futures are quite different than the Bitcoin market. The Bitcoin is an anonymous area. Bitcoin futures is fully transparent to the regulator. Bitcoin retail Bitcoin futures, mostly institutional and high net worth. Bitcoin futures regulated. Bitcoin futures regulated, Bitcoin unregulated. And with Bitcoin futures, we're now having visibility into underlying spot markets and data from those markets that we would not otherwise have.
Completely agree on coordination. Like I said, I break it down into 3 areas. There's this great technology that I agree with you has promise. There are these pure cryptocurrencies, which we need to take a look at across FinCEN, Treasury, CFTC, Fed, and then there are securities offerings that are called ICOs that should be undertaken as securities offerings, consistent with our regulatory regime.
What are your thoughts on the potential value of that underlying technology, of blockchain and distributed ledger technology, both to enterprises and consumers and perhaps to government agencies?
It's important to remember that if there were no Bitcoin, there would be no distributed ledger technology. It grew out of that technology initiative. And the potential applications, and by the way, I'm no pie-in-the-sky dreamer. I just report what I read, but the applications range from enormous potential in financial services industry and the banking industry, but right down to the way charity dollars are spent, the way perhaps refugees are accounted for across the globe. There was an article just this morning about the use of distributed ledger technology for 2.5 billion people around the world who don't have access to banking services. One of the areas that, in our own area of agriculture futures, 66 million tons of American soybeans were just handled through a blockchain transaction by the Dreyfus Company for sale to China. So Bitcoin is now being used. It's used in our American transportation and logistics system. And most importantly, the potential of distributed ledger technology for regulators to be able to do really close market surveillance. And if it had been available in 2008, if we had been able to see the counterparty credit exposure of one bank to another bank in real time with precision, that would have enabled much more precise policy choices that had to be made in a rush without good data. So I think distributed ledger technology has got an enormous potential. Now, how it will be realized, when it will be realized, what are the other challenges in it, those we can't say, but the potential seems extraordinary.
Thank you. Mr. Clayton?
I agree that the potential seems very significant. And just look around anywhere in our economy where verification and record keeping has cost that is potentially reduced is an opportunity for this technology. That's just one of them, and I hope people pursue it vigorously.
Bitcoin, however, has seen a 32,000% increase in its value over the last 5 years. It's declined by some 60%, I think, in just the last 30 days. What are the factors driving that kind of extreme price volatility in Bitcoin relative to securities of public traded companies or the U.S. dollar?
Well, just recently, the volatility we've seen in Bitcoin was not as large as volatility we've seen in some other asset classes, such as the VIX product, which is known as the fear index, a volatility gauge. And so we have seen extraordinary volatility in Bitcoin, but in our world, in commodity derivatives, we're used to volatility in asset classes, and that's one of the things that the emergence of a futures product is meant to do, is to provide those who are exposed to that volatility a means of hedging and mitigating the risk to that volatility.
Mr. Clayton.
I don't really know what's driving the volatility in Bitcoin and cryptocurrencies. They're not correlated with sovereign currencies, so it must be something different from what would drive the dollar. But that's one of the issues before us, is there does appear to be a lot of volatility compared to the medium they are supposed to be a substitute for.
So what does that kind of volatility portend for cryptocurrencies' future as a potential alternative to legal tender of nation states, or in the EU's case, a transnational organization?
You raise a great point. Now, maybe that volatility tamps down to a stable, but an asset that is highly volatile is not a very effective means of exchange because you don't know how much you're getting by the time you receive it or how much you're paying at the time you have to pay it. If you agree a price on day 1 but have to source it on day 10, you expose yourself to significant risk. I will say it again right here. If you are promoting securities, you're potentially taking on securities law liability.
Well, let me ask you, I appreciate that, and I hope that you will think about doing more to protect consumers. Can you walk us through why the SEC at this point is not comfortable with approving ETFs with significant investments in cryptocurrencies?
Our ETF product space is largely a retail product space, and we've made it clear to the marketplace that there are a couple of issues with having an ETF that's based on a cryptocurrency. They go to price discovery, custody, and some other issues around volatility. We've let the industry know that those are issues that are of concern to us and that we don't want to approve an ETF product with a cryptocurrency underlier until we can get comfortable with those issues.
Senator Warren.
Thank you, Mr. Chairman. So I want to go back to virtual currency, and I want to ask about initial coin offerings, ICOs. Some ICOs raise money for legitimate companies, but others we know are just Ponzi schemes. And many of the investors in ICOs are just everyday Americans lured by aggressive marketing promising very high returns. In fact, it is now so bad that Facebook recently banned all ads for virtual currency related products and ICOs because there were so many, quote, deceptive and misleading advertising that targeted regular consumers. So I just want to ask a little bit of question around how we make ICOs safer. Chairman Clayton, the SEC evidently recognized the risk, so it announced last summer that it would consider certain coins to be securities under the Securities Act, meaning that they have to be registered with the Commission and comply with disclosure requirements. In 2017, companies raised more than $4 billion in ICOs. How many of those companies registered their ICO with the SEC?
Not one.
Not one. And as of today, how many companies have registered for upcoming ICOs?
Not one.
Not one. So we're still at 0. Can you just say a word about why that's so?
Yeah.
Okay.
I don't think the gatekeepers that we rely on to assist us in making sure our securities laws are followed have done their job. We've made it clear what the law is. As I've said many times, there are thousands and thousands of private placements that go on every year in the U.S. We want them to go on. We want people to raise capital, but we want them to do it right.
Right.
What ICOs do is they take the disclosure light benefits of a private placement and then add to it the public general solicitation and retail investor promise of a secondary market without registering with us. And folks somehow got comfortable that this was new and it was okay and it was not a security, it was just some other way to raise money. Well, I disagree with them.
So it is not new, it is new, but it is not okay and it is not another way to raise money.
Correct.
I am understanding you to say it is a violation of the law.
Yes.
Registration really matters. When companies don't register their tokens as securities, they can hide information, and the SEC does not have the information it needs to monitor this market.
I am perfectly happy for these people to do private placements, but do them right. Don't try and do it as a private placement, but get all the benefits of a public
and then
offering.
lever over into a public
and do all the
offering.
other shenanigans that are
Well, good. So should I take today as you're sounding a warning bell for people? Maybe they better pay a little closer attention to the law, or the SEC is going to pay closer attention to them?
Yes, and it's not the first time, but I really appreciate the opportunity to do it today.
Thank you. Thank you, Mr. Chairman.
Thank you, Senator. And thank you to our witnesses. We appreciate not only your testimony today, but the work that you are doing in this critical area. I would ask you to get back to me on recommendations as you refine your evaluation of our current financial legislative system and whether we need to provide further clarification from Congress. And with that, this hearing is adjourned. Thank you.